US markets are breaking through that downward channel that we've been looking at for the last couple of weeks, and they've done it with the follow-through day. Gary Glover's been observing, watching these and pulling apart the charts, and here he's going to guide us through and unpack where the key points are, as well as the best trading shares for this week. Good morning, Gary. How are you?
Yeah, I'm great, Chris. I'm good.
Well, it's good to see us move out of those ranges that you've been highlighting for some time, like those bullish flags that you were talking about. If we have a look at the NASDAQ chart, I can highlight on the screen here, this channel here. We sort of broke, no, that wasn't the straightest line. This channel here, and then finally, we've got a day on the outside. But you've also got ABC. So what's standing out to you on the NASDAQ chart right now?
Yeah, so probably the NASDAQ is probably the flattest of the three indices. So, I mean, the good thing is that all three indices are all broken out of their little flags. The NASDAQ there has sort of got spacing between the current low and the previous high as well. So that's really healthy that we've got a little bit of bullish spacing there. And then breaking out of that little flag as well is pretty positive as well. So we know sort of seasonally, sort of that July through to October is kind of the choppy period. Probably come in slightly later here, so very late October low here. But I guess we have probably been a little bit underwhelming in terms of previous cycles. So we haven't, we've been following the right direction there, but we're probably underwhelmed in terms of sort of percentage moves versus the cycles previously. So maybe the correction is just going to take a little longer. But at the end of the day, we've had a pretty good bounce. That's definitely broken out of that flag there, which is pretty positive for mind. And we've done it pretty quickly. So it's been some pretty good volume as well. So volume's been pretty healthy coming out of the low. So yeah, I do like what I see here. Actually, it's pretty positive for the year end there. So I think coming in late October there, that does bode well. For me, I sort of think this potentially could run through to early January here.
So if that's the NASDAQ, and you said it's sort of the flattest of the US markets, moving
it's funny. It's funny how you draw it there. I mean, that's because a lot of people are talking about this being a bit of a cup and handle as well. So it's sort of obviously prefer to sort of see, but it's just obviously that handle or pennant there or flag, or however you call it there. It's still a sort of sideways sort of consolidation. So it does look pretty constructive here. So just need to probably see a little bit more. Some more leaders emerge as well. So just some sort of newer stocks to sort of come in there. But yeah, I just can't see too much negative here so far. So there's still plenty of bears out there, which is good. That's the way it should be. Should be sort of climbing the wall worry. So I think conditions look okay. Just probably want to keep seeing strong volume on the up days and keep seeing sort of lighter volume on the sort of pullbacks there. We did see one distribution day after that rally there, so we did see a little bit of strong selling into the strong rally. But we just want to see maybe the sellers drive a bit more. That's probably the only thing we've seen so far.
Well, that's the NASDAQ, and quite possibly very similar things that we're seeing on the S&P500. Less of a confined channel, more of a broadening as you drew here on the channel, sort of a broadening. The lowers that seem to be extending lower and lower, but as you noted, the last couple of weeks we came from the lows to push out above the overhead resistance line and push out the top. So same sort of thing. Have you been seeing somewhat constructive volume in this movement?
Yeah, so it's obviously slightly deeper, probably less sideways orientated than the NASDAQ there, and it has sort of probably overlapped a bit more. So it did sort of come back to that, I think, February high there. So probably just, maybe just gone marginally below it there, where the green line is there. But it's still pretty solid, sitting on top of the old high in some regards. So yeah, just still looks pretty good here. What's important is that we sort of had that little time-consuming pullback and the right time here, and then we've broken up here pretty quickly. So this rally here has come out pretty hard and fast here so far. That is really quite strong there. Not seeing too much weakness there. And even though we had one day down last week, basically it might have been a Thursday, within a Friday, we've already taken it out and gone to a near high there. So really taking the weakness in stride here. So we've got a bit of CPI stuff this week, I think, in the US. So that's probably the only data to sort of keep an eye on there. But yeah, technically, it looks pretty robust here so far.
And if we go back to Australia and the ASX 200, looking at the XJO, we don't have that same pattern. We don't have the cup and handle kind of formation. That's not really what's happened. You did talk about like a possible fold back kind of thing that we've had on our market. What are you seeing if we've if we haven't broken the upside of that down channel? What have we?
Yeah, no, we definitely haven't been as strong. So we haven't really broken out like the other indices. I guess the positives is that we have sort of bounced from what I consider to be that sort of key support zone. And we've had a pretty impulsive bounce the first week off there. Didn't really get the follow through there last week, but stayed sort of tight there. We did sort of, obviously, Thursday that was a bit negative for US, but then they rubbed it off on Friday there. So just need our index to sort of show a bit more strength there. So a bit more follow through for our index. And I think we can sort of rally back up to the high here. But yeah, just lagging a little bit, which is unusual really, because sort of if we are in a sort of high inflation environment, then generally the sort of value shares tend to do better. So that should sort of be saying that should be sort of telling us the Dow should be better than maybe the NASDAQ. But if inflation is actually cooling, coming off, then the NASDAQ and growth, will do a bit better as well. So the fact that maybe NASDAQ is showing the strength there is suggesting that, is suggesting that sort of inflation is sort of cooling the right direction there. So, I mean, that's what we really want to see longer term. So it's a bit like the oil. I mean, the oil price is at a pretty big pullback here at the moment. That's really interesting because obviously, Santos and Woodside had a pretty large correction now. If we're going to be in a high inflation environment for a sustained period of time, you're likely to see oil prices go back up again. But if they're not, if we're gonna see inflation cool off here, then maybe the oil price can continue to sort of kind of weaken off a bit further there. I know sort of September through to December is always a bit of a weak period for oil prices as well. So, but yeah, so that's just really interesting to sort of keep an eye on that, because that's sort of that'll give you a bit of a gauge as to what's happening with the macro there. So the CPI is definitely going to be important. Yeah, definitely just want to sort of see it sort of ticking lower here. But I think suddenly feels like half the economists are sort of starting to wake up, and that they sort of suddenly realise that inflation is very sticky, and that rates are going to be here for a while at higher levels, and it's going to take a while for it to get down. So does sort of finally feel like at least half the economists now are sort of starting to get it. So so that's sort of positive there. But that means the market's sort of starting to understand it as well. So it just means we're probably not going to see massive alerts in the market until that inflation really cools off there. And so we historically we get more sideways orientation, but that inflation figure does really start to cool off here. The oil price continues to come lower here. Some of those measures cool off there. That can be really good for equities. So, I still think it'll take a while. I think everyone's now projecting out till middle of next year before we see rate cuts, which is, that's the way it historically has been. A sort of inflation sticky. You need to have rates, at a high level for a while. But then once you get it really back in that, towards 2 to 3% again, that's when you can start to cut rates again. So I feel like it's going to be another year away from that. But that's a good sign there. So that's that might indicate maybe mid next year. It might be, that's where I think maybe the market might be in a position to really rally. So it could be quite choppy until then. But yeah, get ahead of myself. We'll keep covering that.
You mentioned you talked about the value shares, inflation, growth shares, and what happens if they do push and pull. We're obviously more of a value indices, the Dow Jones, more of the value indices from the US perspective. And it seems to be a little bit closer to our market. If we look at this channel that you've been talking about, it's still broadening. So the NASDAQ was more confined, the S&P was broadening. This seems to be broadening even more still. How do you read what's happened in the last 3 weeks for the Dow Jones?
Yeah, so for a high inflation rate, this should be the one that really be is looking the strongest here, but it's not. So the NASDAQ that's come back more like our market, quite deep here. So so that gives us hope on the inflation front that they're doing the right things here. But at end of the day, the Dow has sort of, much that's been weaker, it's still sort of broken out here. So it's not the strongest index here. The NASDAQ is definitely clearly the strongest there at the moment. And maybe that's a futuristic thing too, as well, Chris, as well. I mean, sort of, each sort of bear market, you get a new leadership group emerge. So new companies and stuff there. The old leaders don't lead again. So as much as we're sort of going up historical sort of precedent there in terms of growth and stuff there, the reality is that most of us, we've seen with COVID there that more and more people working from home, probably more and more people working in tech, and you don't have to sort of set up a retail premise to set up a business. You can do it all online here now. So it's never been easy to sort of have a business online. So that does sort of maybe there's a lot more businesses are going to be opening up in the tech space because it's easier and cheaper just to set up an online store than it is a physical store. Yeah. So maybe that's the new frontier as well. So, but interesting to sort of see. But yes, at the end of the day, you still got to be profitable. That's the one thing the market is asking these tech firms now is to, like in 2021, it didn't matter. Just matter that you grow your revenue, whereas that's rare. That doesn't happen very often in the market. So we're back to normal here now. Now you've actually got to make earnings and you got to make profits. So that's what we'll get back to what normally value companies.
Well, this week's report, you've picked out a fair few companies who are known for profits or delivering earnings to shareholders and sometimes quite reasonable dividends. So if we move into the trading shares for this week, you've got positive follow through from last week, Ramsay Healthcare. So still talking about congestion. This is down on the lows. You've talked about this in previous videos and interviews, but it's congested. It went up 2, down 1, 2, 3, 4, 5, and then up 2 and broke out at the previous high or B-weight breakout. What do you see next for Ramsay?
So we've got that sort of first high low. I guess a bullish engulfing pattern to at that low, and then we've got follow through here as well. So we've got good volume, and then we've gone to a new high as well. So, if we've got a bit of a base start to build here, Chris, we'll have our washout low, we'll have a first high low, we'll start to see a series of sort of new highs there. So I think this is pretty constructive here, sort of longer term for Ramsay. But I noticed CSL's had a pretty nice bounce off the lows as well. We sort of covered that one previously. Sonic Healthcare's had a nice bounce. So just starting to see quite a few stocks in the sector starting to bounce here. I think the XHJ, which is the healthcare index, that has sort of bounced up to an old low where we sort of had previously sort of been bouncing off before we broke through. So I think if we can get above, I think that level's around 37,722. We'll kind of maybe say 37.7. But if the index closes a weekly above that, that'd be pretty good for the whole sector there. But I'm just seeing starting to see some of the leaders sort of bounce here quite aggressively and quite positively. So just seeing a bit of support in that sector there. So that bodes well for the whole sector there, in my opinion there. So, but look, might be a bit of a building process there, but some good signs here so far.
Well, if you're staying in the healthcare, you're talking about indices itself, XHJ. Within that indices, also Sonic Healthcare, SHL. You've got the daily chart here, and this is just that downtrend that you've spoken about before, and you've said other healthcares have it as well. It made the lower low into late October, but this reversal looks to be quite sharp and fast.
So there's a bit of size to it there, Chris, as well. So it's a pretty decent size move. So probably the largest rally so far off the low. And it's been pretty good volume too off that low as well. Been nice and sort of steady each day. And so just, I think, we're sort of, could have possibly bought the first break there. Sometimes, we probably know 50% of the time we do come back for a retest. So a bit like the head and shoulders pattern there. If you break the head and shoulders pattern, I think 1 and 2 come back to retest the neckline. So probably sort of similar here with these sort of really, bearish sort of kind of wedges there, descending wedges there, because they're sort of pretty negative. They'll often sort of, they can break and go, but oftentimes they do come back and retest, particularly the ones that are probably slanted a bit more aggressive on the downside. But yeah, it does look pretty good here. So I think any sort of weakness, any pullback into the trend here, will be worth looking at there. So yeah, I do like that a lot, actually.
Well, we
just another, yeah. I was just going to say another sort of positive side for that sector as well. So you start to see quite a few stocks in that sector all sort of sizing up there. It's really good for the whole sector.
Yeah, definitely sort of a safety numbers in the same sector, industry or thematic, that's for sure. And you had noted that earlier with lithium and uranium and golds. But if we move to the property, this is one you talked about in the last week or two, saying how they were the most unloved, the ugly ducklings in the market, getting belted quite hard. And then a very quick reversal for many of the property trusts, listed property trusts. Mirvac, so the building group, but they are definitely in the property space. What do you see? This is a very fast fall. How do you look at that and prepare yourself to trade it? Or what do you look for if there's a trade to be found here?
Yeah, so previously I used to look at that and go, no, I won't trade that because it's sort of, because it's been so impulsive and retested the low very quickly. My presumption was that's pretty negative, and that's, there's reasonable volume in that move too. So that would normally tell me to sort of stand aside. That's how I looked at it in the past. But having sort of traded a lot of the false breaks in the last couple of years, and then I've sort of been trying to capture a library of them, so build a bit of a library, and some of the best ones that I've seen that have actually come on the back, actually followed aggressive moves down like that. But the one that comes to mind actually is Aristocrat. I think AWL had sort of something similar where it sort of sold off pretty aggressively. I saw it come down, retest it low. I thought, well, I'm not going to touch that. It looks too aggressive, and it just turned like this, and it rallied really quickly. And then there's a couple others that I sort of had a similar appearance, and again I thought, okay, I'll sort of study these. But yes, some of these are more aggressive looking ones, which previously I would never have traded. I've actually ended up being some of the better patterns. So
would this be the Aristocrat one that you're talking about here?
That was it's probably so a little volume there. Definitely pretty decent volume on the way down, pretty impulsive, going to a new low. Yeah. And then we've just gone straight bang and then reversed, gone straight back out. There's a couple other, I'll have to go check my library, but I've sort of, as traders here, we look at see these sort of trades, just build a library there so you can go back and actually kind of retest them and things like that. So, so the funny thing with Mirvac was it was sort of looking like it was going to break out there, 2 or 3 months ago through the top. So, but it ended up making a bit of a false break at the high and then reversed. So it's done a false break at the high, then gone to a new low. Yeah. So why can't this make a false break at the low and go back and retest make a new high? So, it's definitely this. I mean, if you think about the market, their market's been sideways orientated for a while here now. This is, the false break and these sort of margin new highs and lows are just, they're really just, happening a lot more. And it's just a really, good trade setup here. Look, the beauty of this setup is that if you're wrong here, you've got a pretty tight sort of stop in there, and if you're right, you've got a pretty big upside. So that's the attraction of the setup. So,
and a good trade to have, especially if you've got the library or the playbook of those different trades. So we move still construction sort of space and services. We've got Downer. So what we're focusing on here is this wedge that you've highlighted. And it seems that it was congesting and getting tighter and tighter. The closes for the weekly, these were tight closes and just hugging the lower end of that wedge.
Yeah, it's about 16 weeks, I think, in total. So it's a fairly long sort of pattern there, actually. So yeah, you probably normally don't go that long. But I mean, the volume's been pretty light throughout the whole period there. So I just like the fact that it sort of overshot at the end And now we've seen the last 2 weeks, we've actually seen a bit of volume come in. And I think pretty much, just looks pretty constructive here. Used up plenty of time. And yeah, I think if it kicks up out of that top end of the range there, it's a good sign there. I've just sort of found with these sort of little pennants and flags here, Chris, is that when they tend to overshoot a little bit on the downside, once they come back in, they tend to go out the other side. So sort of they come down and then overshoot it, and then so once you sort of flick back in there, so so it looks pretty constructive to me.
Well, the next one in the list, you've got TUS, the TUS Limited, and cup and handle pattern is what you've said here, which is a beautiful pattern. And you've talked about it many times, and it's a well-documented one, but lots of trading opportunities have come from cup and handles. What do you see? Is this like a cup and handle within a cup and handle? Or
there's a few there. I mean, there was probably actually one in 21 there as well, and sort of came out of that and kicked on through there as well. And then we saw the little one there into 23 there, little handle, pretty short handle there into sort of mid-year there, and then just popped out and then really went for a pretty good run there all the way through to 220. But now we've got another little cup there, and the handle's been sort of tight there. So we obviously like to see handles that are sort of in the higher half of the cup. So it just doesn't come back too much, so it doesn't show too much weakness. Probably like to see a slightly longer handle than that one, but regardless there's still quite bullish patterns here. So in terms of sort of momentum stocks here, you sort of see these are the strongest stocks here. So let's see this the other day. I thought, this looks pretty good setup here. So looked to me like 230 was on the cards there, but who knows whether it shoots through. The volumes of all things, a bit hard to trade. Definitely couldn't trade this with any volume there, Chris. I saw it's just a bit of space in between the bids and offers there. So sort of what my view is sort of, even if it's got something's got the best pattern, looks like a great setup there. You've got to look at liquidity and measure how, if I wanted to get out of this quick smart, how many shares, could I get out quickly? If I have any more than that amount, could I be in trouble getting out? If the answer is yes, then you probably shouldn't have that many. So that's sort of rule of thumb there. We're looking at the depth and thought, okay, well, I wouldn't want to have this many shares on this any more than this, because that might stop me from getting out quickly. But if I need to be out quickly, so. But yeah, it's a good little pattern. I think it actually went to 230 yesterday, Chris. It's done today here, but that's an old high there, so pretty interesting there. But there's no reason why I can't keep going here. So yeah.
No, I think you're right. If I look at the chart, so credit you to these charts on the weekend, and clearly when you're drawing it, the chart wasn't there, but they did crack through and get to 232 as a high yesterday. But these were published before yesterday's trading session.
Yeah, so it's actually gone to a new high today. So that's sort of, even Davis will be buying the breakout 52-week high. So
yes,
we would have bought it yesterday. Yeah, but still looks pretty solid. So yeah.
Well, another one that you've been looking at for the last couple of weeks on and off, like off spring low, is Jumbo Interactive. Looking for that. So we've got the low here, which we had sort of in July, and we've come back. Is that a false break to the upside, and then possibly looking for spring low or a false break here and then turn around?
Yeah, it's come back for a bit of a retest there. Look, it's a bit of a messy low there. I don't love being messy here, but if you go back and look at the personality of the stock here, it does make a lot of messy highs and lows. So it's not unusual for this stock. That's the sort of, I think in the last few weeks I've sort of been showing sort of some stocks that maybe they look unusual there, but if you go back and look at the history of those stocks, it's often not unusual for them. So each stock's got its own personality there. So that this one is sort of, it does often sort of find out. Just looking at that sort of mid-2021 low there, that was a pretty messy sort of low there. I think it might have been around September there, yeah. So that low there was sort of like, it was 2 or 3 weeks of sort of trying to build something off the lows there to get going. Normally you'd see something a bit more impulsive and a better sell on it. strong follow through there, but that was definitely a few weeks there of activity there. So yeah, I think it looks quite good. I mean, the thing I like about it too, Chris, is again, if you're wrong, the stop's pretty tight here. If we're right here, the upside's pretty large here. So, as you know, Mark Douglas, the trading in the zone there, it's just about basically putting yourself in good trade setups there with sort of good, risk reward. So we don't know which ones are going to be the winners a lot of the time. We just sort of, if we've got a pretty good risk reward set up there, it sort of meets our process, and we take the trade. We don't know which ones are going to be the, it's just so we get a win rate of say 40%. We don't know which 4 out of the 10 is going to be, going to pay our way each year, for make a lot of big gains. So we just got to keep taking the good trades, and hopefully this is in the 40% club.
That's right. You've got definitely a tight stop if you enter on JIN, these sort of targets and stops. Two other ones that you've got on the list, big name, Rio Tinto. So Rio, seeing this similar pattern here that you've got sort of this downward wedge. So we've got lower highs that we're signaling throughout here. And sometimes they're conforming lows, or they're getting lower and sort of broadening lower and lower. But Rio's broken out to the upside. So thinking back to Belkowski and his patterns, this touching didn't quite get back down till it turned around, and then didn't get back down once again, and then broke out. So does this sort of give you a bit more confidence, this congestion and tightening towards the upper end?
Yeah, so good pick up there, Chris. Obviously getting shallower and shallower there, not coming back down the full length of the broadening pattern as well. And then sort of hovering there, and then you break out there. I mean, in the last couple of weeks, we saw big volume on the break. We saw a bit of a congestion week last week, but the volumes were down considerably. Has sort of held here, so nothing negative about this so far at all. So even Fortescue, which I think most of the brokers are $16, $17 valuations at the moment. Iron ore price has been pretty robust there, and so it's really strong as well. So just showing real strength in some of these commodities there. So I know lithium's on the nose at the moment. That's just sort of the other stocks are going through there, and obviously oil is on the nose as well. But the thing I've sort of seen with commodities here in recent years is that as some of the basket are going through, negative price action, there's others in the basket who will be doing the opposite, going pretty bullish there. So iron ore looks pretty robust there. When obviously gold's been the other one, it's been pretty strong here. Although it's had a bit of a pullback here in the last week or two. If you look at majority of most gold stocks there, they haven't pulled back too much. Volumes have been generally pretty light here on the pullback. So they just, to me, looks like they're having a bit of a breather to me. But yeah, this iron ore looks pretty robust as well. So it's kind of bodes well for the index.
Especially with the heavier weights, BHP, Rio and Fortescue. They're weighting in the index and exposure to iron ore, if that works well, at the bank's rotating, but that's another matter. NIB is the last one on your trading list this week. NHF's a Tigger. This is different in the sense that you've actually got upward sloping lines on the chart. What's going on here, Gary?
Yeah, so like Medibank Private actually sort of got a similar, but it's more square. But there, this is sort of still going up here. It's just sort of come back down to the bottom of the band here. So, whereas it's just interesting. It's been a pretty robust stock here, but just probably not. I think Medibank Private might have outperformed this one. But just interesting. This has sort of come back down to the bottom of the range here. So, just had a few touches there. Like maybe in different markets, you may not. You might be aware of this, but in this sort of sideways orientated market, it's sort of we are sort of seeing different types of ranges there, sort of more sort of square ranges and things like that. But oftentimes you can see these upper sloping ranges as well. So there's no reason why this basically sort of can't go back up to the top end of the band there. I think in that sort of health space there as well, Chris. I think everyone's sort of retained the health insurance there. The payout's been generally low because we're all still sort of doing a lot of distance working from home there. So it's the actual claims are still down there. So they're still doing quite well. Medibank Private and NHF as well, NIB Holdings. So companies are still sort of ticking along quite nicely. So it's every reason why this could go back up to 850 quite easily.
there was an interesting report impacting both of those companies, Medibank and NIB, that you may have seen floating in the last couple of weeks. But there's a Rugby World Cup on. It helps the quarter that it falls in. It helps the earnings of these two companies because apparently a lot of the surgeons in the country go to the World Cup and are on holidays. So there are less surgeries in the country and less payouts. So
really? Yeah.
That's an interesting statistic that came through for these two. So hats off to the analyst who picked that one up.
I thought you were going to say like all the old guys are basically they're not playing sport for the couple of months. They're on the sidelines just drinking so they don't get injured.
So that could be it too. But it's a bit of a blip on the statistics and the payouts ratios for when the World Cup's on, going back for quite a few years. But nonetheless, we digress. That's an interesting insight and data that we all love to play with and look at from a trading perspective. So they're the trading shares that you picked up this week. You put in the report. For those who are your clients and are trading actively with you, you do keep across, you do send this out earlier and you do keep across that with them. And clearly this was a great pick. So hats off to you. It doesn't show as when this publishes Tuesday afternoon, it doesn't give full credit to you as you did pick that on the weekend when you do this research. So I'll give you credit because by the time it gets published, everyone's going to look at their charts and see that the horses already bolted, but you did pick it before it ran. So,
yeah, there's a few little ones popping up. Actually, there's a few stocks. I reckon there's actually lots of small stocks that are setting up at that. So, I don't know if that's good for small caps or not, but definitely some sort of stocks outside of the 300 there that have sort of got some pretty interesting technical setups at the moment. So, we'll see what happens.
Nice. Well, thank you very much for the research on the charts and the top trading shares of the week. Gary Glover from Novus Capital.
Thanks, Chris.
On the right, Gary looks at the top 30 list, momentum and launchpad leaders, and also trading setups. So he's talking about false breaks and springs and the like, a whole series there just below. And the left is his X or his Twitter handle if you want to follow Gary there.